here you go. We have the S&P Bank Index, and S&P is coming out downgrading Goldman Sachs, downgrading Bank of America, downgrading Citigroup, downgrading Morgan Stanley, as is coming out on the wires at this very, very moment. What I'm showing is the weekly bank index, which is broken, and the lows are going to be in jeopardy here. Now, our view on the overall banking sector at the current value is that the way that it had looked for us was that we are well capitalized here in the U.S. as far as our original financial crisis. However, these bigger banks, like the Wells Fargo, they're going to look at cutting from A plus to A minuses and whatnot. But the thing about it is, U.S. banks, are they extremely tied to euro debt? What do I mean by that? Well, let's forget about the word euro. Let's just call it European. That's what I mean. European debt crisis, Italy debt crisis, bonds, notes, you name it. Are the U.S. banks at higher risk now than what they originally were, because how much losing assets are they carrying out of Europe? We're going to be discussing that in the future, okay? And just stay tuned with stock market funding. This is the banking index, and these are the names that are in this particular index. Bank of America was downgraded. Another one would be in this particular group, in this one. This is the main culprit right here. When you take a look at the KBW banking index, you're going to find the JPMorgan in here. You're going to find USB in here. That's on the list as well. You're going to find that this weekly chart here is highly at risk. This is why we have told people to avoid these financials. And over the last couple of calendar years, everybody thought that they were going to be on sale. No, they're not. They're at risk. We're going to be doing a special. We just want you to see where this particular bank index is. There is also a FAZ, which is a bear financial that has put a calendar year bottom in these U.S. financials. This made the high. It's pulled back, and this is its bear 4-week bottom. It would behoove us to be extremely on high alert with alarm systems set on this FAZ. If there are any more turmoils within the banking system, and Goldman Sachs, it falls in this category here as a broker-dealer, because that's what it is. It's a big market maker. Morgan Stanley, well, they're on that list too. So there's going to be about 37 banks. Will it be doom and gloom? Listen, it all depends on the specials that will be running on collateral debt re-leveraging and deleveraging processes, and believe me, worldwide liquidity debt ratios will have to come into play. These are the things that we have forecasted about the fact that Europe, and the way that our banking system is tied to Europe and other areas in the world, is what is ultimately going to be what's going to happen. The NASDAQ financials, I'm sure that there'll be some in this index that get downgraded. NASDAQ banking, BANK.X, will be going through here with the fine tooth. Notice how they're all red today, except for some of the ones at the bottom here. There was some positives in certain kinds of banking indexes, but we're looking at the big horses, and the big horses are the ones that are going to have some serious problems moving forward. And once again, we'll be watching this banking index very carefully, both, and the S&P here. Here's the S&P, okay, and the ones that are in it. Financial downgrade.